Hello, my name is Deniz Appelbaum. I'm an assistant professor of accounting and finance here at Montclair State University.
I'm Peter Lohrey. I'm also an assistant professor of accounting and finance here at Montclair State University.
And we've recently undertook a joint initiative to discuss how to forensically analyze blockchain and Bitcoin transactions. My area of expertise has been in information systems and technology, and I teach blockchain here at Montclair in my classes. And Dr. Lohrey here is an expert in forensic and valuation accounting. And so we thought it would be a good opportunity for us to join our collective expertise in this initiative because it's an area of business which really is undeveloped. The idea that all digital currencies and blockchains, they all create what's called a token, which is basically a digital signature of that transaction. And depending on the nature and the intent and the purpose of the transaction, it's either going to be a security or a commodity or what they call a utility token or a functional token or an asset token, or in other words, representing an asset or property. And so the cryptocurrency space is very open right now. It's sort of like a Wild West. And so we're currently writing a paper called Token Accounting, the forensic perspective of the Wild West. And
yes,
Peter, if you want to add to this.
I think Dr. Appelbaum's analogy is spot on. Tokens and cryptocurrency are now at the front edge of where we're going in regard to money. Mm-hmm. And so forensic accountants, we usually are able to determine something may have occurred that was either illegal or against certain laws, and usually we look for patterns in the data. Mm-hmm. So one of the problems that we're facing in the forensic world is that many of these cryptocurrency algorithms and the way that the tokens are designed, the question is, how do we get to them?
Right.
How do we get there? And then the second thing is from a regulatory standpoint, because the U.S. federal regulators, that being the Commodities Futures Trading Commission and the Securities and Exchange Commission, they're still adjusting to what's going on. They're still in the investigative or research phase, whereas the only government agency that's really made any definitive progress so far has been the Internal Revenue Service.
Right.
And that has to do with people not reporting their income.
In fact, they had a problem with that. They were challenged. They had to actually force one of the coin exchanges into court to have them release the identities of individuals who had more than $20,000 worth of gains in the crypto space. Right. And they still have issues trying to enforce it. So most crypto owners do not disclose on their taxes voluntarily, of course, if they've made certain capital gains.
Right, and this is an example of the emerging research that we do as professors, because traditionally we would look at what we call archival data, mm-hmm. and look at things in the past where there are records and facts that we can use to support our hypotheses or refute them. Whereas in this environment, with the topic that we're working on, it's ever changing. It's always evolving. So we're going to do our best and see what we can come up with, but I wouldn't be surprised if things change as our research progresses, and we'll have to be able to adjust ourselves.
Right. Although it seems like the CFTC, or Commodities Futures Trading Commission, has been fairly consistent in saying it's a commodity, and the SEC has published several white papers, positions that it's a security, but they have not regulated it as such. So we anticipate this will be happening in the future. And we want to be ahead of this particular moment and try to help forensic accountants who are being called on now by firms and by individuals to help them understand what they actually own. Is it a security? Is it a commodity? What are the legal implications, regulatory implications of having these tokens as they are? We wanted to get ahead of that before it actually is established in regulation.
And the interesting thing is, again, as I sit here with Professor Appelbaum today, I can see our research going forward for many years to come. Yes. Because this is a tip of the iceberg, cutting edge thing, and one thing at a time. But eventually, first we're focusing on domestic United States.
Right.
But inevitably, when you look overseas at different countries, in certain countries, for example, in the People's Republic of China, people are using cryptocurrency in everyday life.
Right. Exactly.
And so, even though we're looking currently at the U.S. domestic aspect of it, we live in a world that's internationally connected, and so therefore, eventually, I'm sure, one step at a time, we'll get to looking at things from the international perspective also.
I mean, the challenge is being that cryptocurrency really doesn't know any national borders, although the exchanges are maybe located as physical countries, or that's where they're their headquarters or house, but it's really they're virtual and they're cloud-based, and individuals can transact from anywhere in the world, or they could also be within a VPN and say they're from Switzerland. In reality, they're sitting in Chicago. So this is another challenge, is how to track the ownership and the origins of the transactions.
Right, and we already mentioned the fact that here in the United States, the federal government's developing, researching, trying to figure out how they want to regulate this. But one of the problems that occurs frequently with our interconnected world is you can have someone that commits fraud, and they might be physically located in the Ukraine or another country, and even though the crime was committed and it affected a U.S. citizen, right now there's not a whole lot of international regulation, nor is there international law that could be used to deal with these people that are committing illegal acts.
Another challenge is that there's very few regulatory or governmental assurance around crypto transactions. So for example, there's no FDIC guarantee, so if you lose your money, if someone hacks your wallet, your funds are gone.
Yes, and so therefore, again, that's what makes research exciting. We don't know where it's going to lead us, but we want to try and analyze this and provide an insight to the greater public at large. And our hope is that our work will be read widely and hopefully lead regulators possibly towards dealing with these issues that we've just raised.
And thank you very much.
Thank you.